And when you have a debased currency, and they're all debasing, just some at different rates than others. The dollar's stronger than other currencies because they're debasing faster, but they're all heading to zero. So because of that fact, you're going to see gold maintain its...
Silver could be on the brink of a rally unlike anything we've ever seen, and the signs are all there. Did you know that silver just broke through a critical resistance level, triggering what experts are calling a silver squeeze that could push prices to historic highs? David Morgan himself says this is a once-in-a-lifetime opportunity, but only if you act fast. Stick with me, because in the next few minutes I'm going to break down why this could be the moment that changes everything for silver investors.
Gold maybe got slightly ahead of itself. I mean, it was maybe overbought. And, Trump was maybe the reason, maybe not, but it obviously had a big sell-off. These are normal moves in a bull market. I mean, I've warned about this time and time again, where, the main idea is to stay on board, hold tightly all the way up, because there will be these shakeouts that will scare people out. And this probably the first one we've had since we broke well above the 2000 level, got all the way up to about 2,800. Now we've had this correction down to 2,550 or so. It's coming back up. I think we're in a trading range for a while. Then the trading range could be to the end of the year. It could go into halfway through 2025. I don't know. But I do think that we are in the third leg up, which should be the most powerful. It should be fairly short in duration, because we've had a bull market basically from the year 2000. It went 2000, 2011, and then from 2011 till recently, we basically did a big, down move, big correction, all the way from roughly 2000 to 1050, and then back up, and now we're making new highs. So the big picture again is higher prices, and how long? I'd say 2 or 3 more years, or probably at the end of the cycle.
Let's talk about where silver stands today. For months, silver prices hovered in a frustrating range, leaving many investors disillusioned. But all of that changed just recently. In a single trading session, silver surged nearly 7% and decisively broke through the critical resistance level of $32.50, something experts had been waiting on for months. This is no small feat. It's a technical confirmation that signals the next phase of silver's bull market. What makes this breakout even more exciting is the unprecedented trading volume that accompanied it, double the average of the previous weeks. That kind of activity is a clear sign that institutional investors, or what's often called smart money, are finally stepping into the silver market. Now, why does this matter? Breaking a resistance level like $32.50 is not just a psychological milestone. It's a signal to the market that silver is ready to climb higher. Historically, when silver breaks through key levels, it tends to rally fast and hard. Remember, this isn't just about today's price. This could be the starting point for a run that takes silver to its previous highs, or even beyond. But that's not all. This surge didn't happen in isolation. Silver priced in euros also shattered its own resistance level at your 30, closing above your 31 for the first time in years. Why is this significant? Analyzing silver and other currencies like the euro eliminates the noise caused by fluctuations in the US dollar, giving us a clearer picture of silver's true strength. This dual breakout, both in dollars and euros, is a rare and powerful indicator of sustained upward momentum. And let's not forget the broader economic context driving these movements. Geopolitical uncertainty, rising inflation, and fears of a potential recession are making precious metals like silver and gold more attractive as safe haven assets. When global markets feel shaky, silver often becomes the go-to choice for both individual and institutional investors. It's not just about the headlines. It's about how those headlines translate into buying pressure on commodities. Here's another fascinating element. The gold-to-silver ratio, a key metric for evaluating silver's value relative to gold, just broke below its long-term support zone. This means silver is not only undervalued compared to gold, it's poised to outperform it. In fact, if silver were to merely catch up to its historical average gold-to-silver ratio, we'd already be looking at prices over $1.50 per ounce. But let me ask you this. If silver is breaking out on multiple fronts, with the kind of volume that we've only seen during historic bull runs, why is it still flying under the radar for so many investors? Could this be the perfect storm of overlooked potential and undeniable momentum? Stay tuned, because in the next segment, we're diving into why this breakout could be just the beginning of a much larger move, fueled by factors that go far beyond technical charts.
Clout still. I mean, they've had, Milton Friedman spoke there, Margaret Thatcher spoke there. I mean, dignitaries would be like keynotes at times. But I just want to mention about James Blanchard III, who founded the company. And he, when Nixon did the closure of the gold window, on his second inauguration, Blanchard rented a plane that had a tail banner behind it that said legalize gold. And he had a couple ounces of gold and was actually protesting and asking, the police to arrest him for owning gold. And Gerald Ford actually saw a Blanchard commercial and decided that he would, make gold legal again for Americans to own. So you go back in the history of, the honest money, sound money movement. James Blanchard III was certainly one of the front runners in that movement. I'm just going to say that during my speech later today, just to remind everybody that's at the conference. I'm sure probably 30-40% probably know that story, but there's probably half of the audience that really don't. And just to, talk about people that influenced me. I know I had some influence on you, and I know others than myself. Certainly it's not one person, but it's actually the philosophy, the ideology, or the plain seeking truth of what works in a monetary system and what doesn't. What's the fairest way to go about
Now, let's dig deeper into one of the most exciting drivers of this silver breakout: institutional activity. For years, silver has been treated like the underdog of precious metals, with much of the spotlight going to gold. But here's the thing. Major institutions, or what's often called smart money, are now making bold moves in silver, and the recent surge in trading volume is the clearest evidence of that. Let me paint a picture for you. On the day silver broke above $32.50, trading volume wasn't just high, it was more than double the average for the prior weeks. This kind of activity doesn't happen because of retail investors alone. It's a sign that large institutional players are entering the market, possibly in response to the clear technical breakout. When institutions get involved, they bring billions of dollars into the equation, creating a tidal wave of buying pressure that smaller investors simply can't match. But why now? What's pushing these big players into silver? The answer lies in something called short covering. Here's how it works. When traders bet against silver by short selling, they essentially borrow the asset and sell it, hoping to buy it back later at a lower price. However, when the price unexpectedly rallies, these traders are forced to buy silver at higher prices to close their positions, creating what's known as a short squeeze. And here's the kicker. According to recent data, COMEX silver futures are currently experiencing one of the largest short positions in years. We're talking about swap dealers, mainly bullion banks, holding net short positions equivalent to a staggering 23% of annual global silver production. That's over 194 million ounces of silver, and as prices rise, these positions become unsustainable, forcing short sellers to cover. This creates a feedback loop where buying begets more buying, driving prices even higher. Now think about this. Every $1 increase in silver's price costs these institutions nearly $200 million in losses. Just last Friday, it racked up close to $400 million paper losses in a single day. Imagine what happens when silver climbs $5, $10, or even $20 from here. The pain for short sellers could turn into massive gains for investors who are ahead of the curve. But the story doesn't stop there. Many experts believe that some of these large short positions are held by major bullion banks, like J.P. Morgan and UBS, who may have been engaging in aggressive naked short selling. selling contracts without holding the physical silver to back them up. This could backfire spectacularly as these banks scramble to buy physical silver in a market already strained by a global supply deficit. And speaking of supply, did you know that for every ounce of physical silver, there are roughly 408 ounces of paper silver in circulation? This insane ratio means that if enough short sellers are forced to cover, there might not be enough physical silver to go around. In such a scenario, prices for physical silver could skyrocket, leaving those holding paper silver scrambling to convert their contracts into something tangible. Here's the bottom line. Institutional activity, fueled by short covering and a looming supply squeeze, is setting the stage for an explosive move in silver. The big players are finally waking up to what many savvy investors have known all along. Silver is not just an industrial metal, it's a strategic asset with untapped potential. So here's the question. If institutions are betting big on silver's future, shouldn't you at least consider what they might know that the rest of the market hasn't fully caught on to yet? Let's keep going, because the factors driving this rally don't stop with institutional activity.
I know that you do. But as, let's say, the next system comes into place, which it's already done in China, I'm going to digress for a moment. But right now, there's 1.4 billion people in China. 800 million of those people are on the system. And this is the system that the banking elite want to go worldwide. And they don't use anything but their phone. And I'm going to put at the end of my speech, Elijah, that they actually use a handprint as well. And of course, I've always thought there'd be a microchip, implanted into your right hand, perhaps. But this one in China actually reads your palm without a chip in it, based on like a fingerprint, because the lines in your hand are unique, just like a fingerprint is. So if you're in China and you forgot your phone or the power's down and you don't have a charge on your phone and you want to buy something, it's not ubiquitous. It's not everywhere in China, but it does exist where you can just put your hand over a reader and still get your 2 Cokes and whatever they buy at the convenience store and walk out. So these are very interesting times, but basically, silver guru and all that, and I'll take the accolades and, whatever, I'll take the good with the bad. But, if you boil down, David, what's one word for what you've done, what you want, what you need, what you want for, the planet to be happy, joyous, and free? It's simple. It's freedom, period. And without freedom, it doesn't matter how much gold or silver you've stacked. If you can't use it, spend it, do with it as you wish, interact freely, speak freely. I mean, really, what good has it done you? And the answer is not very much in my view. So, it's a bigger picture here. I know you're well aware of it, called liberty and finance, but you've talked about freedom throughout the whole thing. And that's the big picture. I mean, you got it very early age. And that's, I think, something that I need to remind people that, having a big stack is even of real money, gold and silver. If you don't have the freedom, again, I'm repeating, but what good is that? And I think that's a message that may be lost, because especially the American system is pretty much, if you have financial freedom, you have freedom. Those days are gone.
To truly understand where silver could be headed, we need to look back at its history. Silver's story is marked by explosive rallies that catch even seasoned investors off guard, and the parallels between past bull markets and today's conditions are nothing short of remarkable. Let's start with the famous silver rally of 1980. Back then, silver soared from just $6 per ounce in January 1979 to an astonishing $50 per ounce by January 1980. That's over a 700% gain in just 12 months. This rally was driven by a mix of geopolitical tension, runaway inflation, and the infamous Hunt brothers attempting to corner the silver market. But here's the part most people overlook. Even after the peak, silver's average price for the entire year was $24 times higher than it had been before the rally started. Fast forward to 2011, and we see another striking example. During the aftermath of the 2008 financial crisis, quantitative easing flooded the market with liquidity, sparking fears of inflation. Silver once again broke through resistance levels, climbing from $17 in late 2010 to nearly $50 by April 2011. While it couldn't sustain that peak, it still left many investors with massive returns during its ascent. Now, why does this matter for us today? Because history doesn't just rhyme, it often repeats. The conditions driving silver's current rally are eerily similar to those past bull markets: rising inflation, economic uncertainty, and a shift in investor sentiment towards safe haven assets. Add to that the unique factor of today's massive short positions, and we could be looking at an even more dramatic outcome. But let's take this a step further. Adjusting for inflation, silver's 1980 peak of $1.50 would be worth over $143 in today's dollars. Even its 2011 peak translates to $1.68 when adjusted for inflation. Yet here we are, with silver trading at just over $1.33. That gap between historical peaks and today's prices underscores just how undervalued silver is, especially when you consider the structural changes in the market since those earlier rallies. One of those changes is silver's growing role in industrial applications. Back in the 1980s and 2011, industrial demand for silver was significant but nowhere near today's levels. With the rise of electric vehicles, solar panels, and other green technologies, silver has become a critical component in the global push toward renewable energy. This industrial demand adds a whole new layer of support for silver prices, something that didn't exist to the same extent in past bull markets. Another historical metric to consider is the gold to silver ratio. Historically, this ratio has averaged around 52:1, meaning it takes 52 ounces of silver to equal the value of 1 ounce of gold. During past bull markets, this ratio has often fallen even lower, signaling silver's outperformance relative to gold. Today, the ratio is still well above its historical average, hovering around 7:5:1. If silver were to catch up to gold and return to its historical ratio, we'd already be looking at prices above $1.50 per ounce. Here's the key takeaway. History shows us that silver has the potential for explosive gains when the right conditions align. And those conditions, economic instability, inflation fears, and rising demand, are not only present today, but amplified by modern dynamics like institutional activity and supply deficits. So let me ask you this. If we've seen silver hit $1.50 twice before under less favorable conditions, what's stopping it from not only hitting but surpassing that mark in this rally? The pieces are falling into place, but we're only halfway through the story. Stay with me as we uncover the macroeconomic factors that could propel silver even further.
That's the basis of my speech here in New Orleans. I'm going to speak later today on the new monetary system, and it's based on the Bankers Bank, the BIS, with Bank of International Settlements, as basically put forth as a mandate for how the central bank digital currencies all work together under one uniform agreement, which I already outlined, to get the new system in place. So that's the bigger picture. And so how do we mitigate that? Well, there are ways to do it. Of course, gold and silver are really the primary ways to do it. You can do it now, face to face. You can also do it in the digital world. There are several gold and silver backed cryptocurrencies that you can use. Cryptocurrency is an option. I don't see it as the most viable option personally, but it's there. So you've got that option as well. And then you could go even further. I mean, you can go back and look at some of these pushbacks on even during the Great Depression. If you look in recent times, the Ithaca dollar, I mean, communities just did this during the Depression. The Ithaca dollar is a good example of more recent times where a community says, look, we know what money really represents. It represents labor. And we're going to put a unit of account into a piece of paper on how many hours you worked, and you're able to trade those among our own community. That actually works. So there are alternatives. There aren't many, and especially your freedom, as you know more than probably anybody, especially at such a young age. And again, I publicly commend you for that. But, what is it? Finance and liberty. There's a direct relationship between the freedom of a monetary system of people being able to determine their own well-being based upon a standard of value that really removes government from the overseer of the value, where we have a free market. And if you have the currency that's controlled by an entity that tells you what value it is, how much it costs, and all the things that are in the system now, you basically have a huge control mechanism that takes away your liberty. Most people don't think of it in those terms.
Now let's zoom out and examine the bigger picture. The macroeconomic environment today is not just favorable for silver, it's practically begging for it to thrive. We're witnessing a perfect storm of factors that are pushing investors toward precious metals, with silver uniquely positioned to benefit. First, let's talk inflation. Central banks around the world have been printing money at an unprecedented rate over the last decade. The result? A devaluation of fiat currencies and rising prices across the board. Even though official inflation numbers might appear modest, anyone who's been to a grocery store or paid rent lately knows the truth. Your money buys less every year. This erosion of purchasing power has historically driven investors toward assets like silver, which hold their value over time. Unlike fiat currencies, silver isn't something that can be printed out of thin air. But inflation is just the tip of the iceberg. Consider the growing concerns about global economic instability. Whether it's fears of a looming recession, geopolitical conflicts like the ongoing tensions in the Middle East and Ukraine, or the strain on supply chains, investors are looking for safe havens. Silver, with its dual role as an industrial metal and a store of value, fits the bill perfectly. And here's a twist. While gold often steals the spotlight as a safe haven asset, silver is like the stealthier, more undervalued option that savvy investors are starting to notice. Speaking of undervaluation, we can't ignore the role of supply and demand dynamics. Did you know that the silver market has been in a supply deficit for the last 4 years? In 2023, the deficit reached 184 million ounces, and for 2024, it's projected to climb to an even larger shortfall of 215 million ounces. This isn't just a statistic. It's a red flag signaling tighter markets and higher prices. Industrial demand, particularly from sectors like renewable energy and electric vehicles, is driving this deficit. Silver is essential for solar panels, which are a cornerstone of the global energy transition. With governments around the world doubling down on green energy initiatives, this demand isn't going away. It's accelerating. And while demand surges, supply is struggling to keep up. Global silver mine production has been declining, and above-ground silver inventories are shrinking rapidly. This imbalance is creating a pressure cooker effect, where any additional demand, like that coming from investors looking for safe haven assets, could trigger a dramatic price spike. Now let's add another layer to this: monetary policy. Central banks are signaling a potential pivot away from aggressive interest rate hikes as the global economy shows signs of slowing. Lower interest rates reduce the opportunity cost of holding non-yielding assets like silver, making them more attractive. Historically, silver has thrived in low interest rate environments as investors look for alternatives to bonds and cash. Finally, there's the looming threat of de-dollarization. Many countries, particularly in the BRICS bloc, Brazil, Russia, India, China, and South Africa, are exploring alternatives to the US dollar for trade and reserves. Some are even considering using gold or other hard assets to back their currencies. This shift could dramatically alter global financial dynamics, driving more demand for tangible assets like silver as nations and individuals hedge against a weakening dollar. Here's the question you need to ask yourself. If inflation is eroding your purchasing power, if supply and demand fundamentals are pointing to tighter silver markets, and if global monetary shifts are favoring hard assets, what are you doing to protect your wealth? Silver isn't just an opportunity. It's a solution to the challenges of our time. But we're not done yet. Next, we'll take a closer look at the expert insights and predictions that are adding even more weight to the case for silver's historic rally.
Well, you outlined it perfectly. I mean, it's sad but true. It's a red-blue team in the geopolitical who's going to have the reserve currency. status. And so if you look at what I wrote, if you go to search engine, type in ISO 222, the outline's already been agreed to worldwide to have one settlement process. So it doesn't matter if you come from the blue team or the red team, come from the BRICS perspective or the dollar-dominated reserve currency perspective, you're still going to have a settlement that's agreed upon by both sides. So really, I think it's a bit of distraction more than anything else. I mean, could one team break away from the other one and, start its own system and all that? Very unlikely.
Let's turn our attention to the experts, the people who have spent decades studying and forecasting silver markets. One voice that stands out is David Morgan, often called the silver guru. His insights into the silver market aren't just compelling, they're urgent. According to Morgan, the conditions we're witnessing right now could lead to a historic rally, and he believes the window to act is closing fast. In recent interviews, Morgan has highlighted several key reasons for his bullish stance. First, he points to silver's breakout above $32.50 as a critical technical signal. This wasn't just a random price move. It was a decisive moment that marked the transition from stagnation to growth. He's emphasized that when silver breaks through resistance levels like this, it tends to trigger massive buying momentum, and this rally could be no exception. But Morgan doesn't just rely on technical analysis. He's also laser-focused on the fundamentals. He's repeatedly stressed the role of supply deficits in shaping silver's trajectory. With industrial demand rising, particularly from green technologies like solar panels and electric vehicles, Morgan believes the current deficit is unsustainable. In his words, you can't ignore a structural imbalance like this. It's only a matter of time before the market corrects itself, and when it does, prices will skyrocket. And then there's the matter of short positions. Morgan has warned that the sheer size of these positions, amounting to nearly 23% of annual global production, represents a ticking time bomb. As prices rise, short sellers are forced to cover their positions, which creates additional buying pressure. This is what's known as a short squeeze, and according to Morgan, it has the potential to push silver prices to levels we haven't seen in decades. He's also quick to highlight silver's historical performance. Morgan often reminds investors that in past bull markets, silver has outpaced gold by significant margins. In fact, during the 1980 rally, silver outperformed gold nearly 2-1. He believes we could see a similar dynamic play out in this cycle, especially given silver's current undervaluation relative to gold. But perhaps the most compelling part of Morgan's thesis is his call to action. He isn't just predicting higher prices, he's urging investors to act now. Why? Because he knows how quickly the silver market can move once momentum builds. In his words, when silver rallies, it doesn't give you time to think. It's better to be early than to be left behind. And Morgan isn't alone. Other experts are echoing his sentiments. Analysts are pointing to inflation-adjusted price targets that range from $1.68 to over $140 based on historical peaks. Institutions are increasing their exposure to silver, and even retail investors are starting to take notice. The consensus among these experts is clear. The conditions for a silver rally are as strong as they've been in decades. So here's the big question. If the people who know this market best are sounding the alarm, shouldn't you at least consider why? David Morgan and others aren't just forecasting higher prices. They're warning that this could be a once-in-a-lifetime opportunity. And as we move into the final stretch of this discussion, we'll look at the challenges and risks that could impact silver's rally and why the potential rewards far outweigh them.
Lightened view of gold, really. I mean, gold is a monetary hitching post of the universe. And when you have a debased currency, and they're all debasing, just some at different rates than others. The dollar is stronger than other currencies because they're debasing faster, but they're all heading to zero. So because of that fact, you're going to see gold maintain its value, but the price varies because they keep increasing the supply of U.S. dollars and yuan and euros and anything else. And because of that, in paper terms, the price increases, but the status of gold, an ounce of gold's an ounce of gold. So it's done its job, and I think that is the main overriding thesis, well on top of geopolitical concerns, which will fluctuate the market within the big context that you just outlined, or we just outlined.
While the potential for silver's historic rally is undeniable, no investment comes without risks. It's crucial to look at the challenges silver might face and how these could influence its trajectory. By understanding these factors, you can make a more informed decision about whether silver belongs in your portfolio. One of the immediate challenges is market volatility. Silver, more than gold, is known for its price swings. While these fluctuations can lead to significant upside during rallies, they can also test the nerves of even seasoned investors. A sudden dip might cause some to panic and sell prematurely, missing out on potential long-term gains. Historically, however, these corrections have been short-lived in bull markets, serving more as opportunities to buy than reasons to sell. Another factor to consider is silver's dual role as an industrial and precious metal. On one hand, this is a strength. It diversifies silver's demand profile. But on the other hand, it means that economic slowdowns or reduced industrial activity can temporarily dampen demand. For example, if a global recession were to hit, industries like electronics, automotive, and solar energy might scale back their consumption of silver, putting downward pressure on prices. Geopolitical factors also play a role. While conflicts and tensions often boost safe haven demand for silver, easing tensions can have the opposite effect. For instance, recent talks of ceasefires in conflict zones have momentarily reduced silver's appeal as a hedge against uncertainty. However, these shifts are often temporary, as underlying economic issues tend to reassert silver's value in the long run. Then there's the influence of the U.S. dollar. Silver is priced in dollars, and a strengthening dollar can weigh on its price. Recent Federal Reserve policies, such as interest rate decisions, have added pressure to precious metals by boosting the dollar's appeal. However, many analysts believe that the Fed is nearing the end of its rate hike cycle, which could reverse this trend and provide a tailwind for silver. A more structural risk involves market manipulation. Allegations of price suppression in the silver market have persisted for years, with some pointing fingers at major bullion banks. These institutions are often accused of using futures contracts to artificially cap silver prices. While such actions might temporarily delay silver's upward momentum, they also set the stage for explosive moves when the pressure becomes unsustainable, as we've seen during past short squeezes. Lastly, let's address the psychological challenge. Investing in silver requires patience and conviction. It's easy to get caught up in the noise of daily price movements or the opinions of skeptics. But as history has shown, the biggest gains often come to those who hold steady through the turbulence. Here's the bottom line. While silver faces its share of challenges, the factors driving its rally, supply deficits, rising demand, and economic instability, are far stronger and more enduring. The risks are real, but they're also manageable, especially for investors who approach silver with a long-term perspective. So let me ask you, are these risks enough to outweigh the potential rewards? As we move to the conclusion, we'll connect all the dots and reveal how the unique circumstances of today's silver market could create life-changing opportunities for those ready to act.
As we both know. If the Russians retaliate, which they most likely will, the ICBM, as you mentioned, what happens next is the Ukrainians fire back harder than ever, and this thing really gets out of hand. That's a possibility. The other possibility is they kind of stagnate here, kind of at this level, moves into the January 21st onward, and Trump is able to negotiate some type of settlement. Maybe the Donbass goes to Russia and we adhere to the Minsk agreement, and people understand it, say, well, that's the way it should have been from the beginning, but that's a side topic. and everybody's back peacefully. But the other part of it, of course, is what happens on the other side in the Mideast with Iran and Israel, and that's another topic. But but the Ukrainian war, if that was to end after Trump got into office, I think would certainly quell the markets for a while. And if that were to happen, you could see gold go sideways for a while. The safe haven status is needed. Fearless leader has done us a lot of good worldwide. Wants war. Anybody that's sane doesn't. And so that could mitigate the pressure on gold as a safe haven.
This is it, the moment where all the pieces come together. Silver isn't just another investment. It's a unique opportunity to position yourself ahead of what could be a historic financial shift. The evidence we've explored, technical breakouts, supply deficits, institutional activity, and macroeconomic drivers, all point to one conclusion. Silver is primed for a rally of monumental proportions. Let's start with the numbers. If silver were to return to its inflation-adjusted peak from 1980, we'd be looking at a price north of $140 per ounce. Even the more conservative target of $68, adjusted from its 2011 high, represents massive upside from today's levels. And let's not forget the gold to silver ratio, which still suggests silver is significantly undervalued relative to gold. A simple reversion to historical norms would push silver well past $50 per ounce. But this isn't just about hitting price targets. It's about the forces driving silver higher and why they're so unique to this moment. The looming short squeeze, fueled by unprecedented short positions, could ignite a rally that catches the market off guard. As short sellers scramble to cover, every price increase feeds into the next, creating a feedback loop that accelerates silver's climb. And with 408:1 ratio of paper silver to physical silver, the potential for chaos and opportunity in the silver market is unlike anything we've seen before. Then there's the structural supply deficit. Industrial demand from green technologies like solar panels and electric vehicles is creating a persistent shortfall in silver supply. At the same time, global above-ground inventories are being rapidly depleted. This is a classic case of tightening supply and meeting surging demand, and it's a recipe for explosive price action. On the macroeconomic front, silver is positioned as both a safe haven asset and an inflation hedge. As central banks continue to print money and debt levels soar, the devaluation of fiat currencies becomes inevitable. This isn't speculation. It's history repeating itself. Silver has always been a refuge during times of monetary instability, and today's conditions are more extreme than ever. But here's the kicker. While all these factors are aligning, most investors are still asleep at the wheel. Silver remains underappreciated and underowned, even as the conditions for a breakup become impossible to ignore. This is the moment where early movers have a chance to secure their position before the rest of the market wakes up. So what does this mean for you? It means that the window to act is shrinking. Silver's potential isn't just theoretical. It's backed by hard data, historical precedent, and the very real dynamics of today's market. But rallies like this don't wait for everyone to catch up. As David Morgan puts it, when silver moves, it moves fast. The question is, will you be ready when it does? Before we wrap up, let me remind you, this is not financial advice, and every investment carries risk. Do your research, consult with professionals, and make the decision that's right for you. But if there's one takeaway from everything we've discussed, it's this. Silver isn't just another trade. It's a story of opportunity, resilience, and the potential for life-changing gains. If you found value in this deep dive into the silver market, don't forget to like, subscribe, and hit the notification bell. Let us know in the comments, do you think silver will hit a new all-time high, or are there still challenges holding it back? Your thoughts could spark the next great discussion. As always, thank you for watching.